Welcome to MFAA On Air.
With 2014 already in full swing, MFAA On Air is looking back at the year that was and forward to what's in store for the year ahead. MFAA CEO Phil Naylor says the financial system inquiry is wide enough to encompass the concerns of the MFAA.
The financial system inquiry looks like being a sincere attempt by the government to do a root and branch inquiry into the whole financial sector. It'll be the biggest inquiry since the Campbell inquiry in the 80s. We've had a briefing with Treasury, and Treasury have given us a pretty good idea as to how they believe the inquiry will run. The terms of reference are very wide, and we think they're certainly wide enough to take into account the points that we want to make, and we have been making for a number of years. That is our concern about lending competition in the lending sector, and also access to funding by lenders, especially smaller lenders, at a competitive price. The other point that we'll be running is making sure that the whole system runs with an appropriate regulatory environment. There are some concerns that the current environment's just gone a little bit too far.
The MFAA consumer campaign wrapped up, successfully implementing the new terminology and encouraging borrowers to use MFAA-approved credit advisors.
Our objectives at the start were firstly to promote the new terminology we were using, the new accreditation, which is credit advisor, and always when you're starting with a new term, it's more difficult to sell. So we're pretty happy with the results. We had 20,000 new visits to the site, so that's good. And of those, 1,700 actually clicked on the Find a Credit Advisor facility, so people are actively looking for a credit advisor. But the good thing about it all is about a third of those, or more than a third of those, actually clicked on one of our members' phone numbers, indicating clearly that they had an intention of contacting that member. So we think they're the metrics that we can look at when we run a similar campaign or another campaign next year.
Despite a bleak outlook for the economy over the coming year, Phil Naylor believes there's a silver lining to every grey cloud.
We've heard some pretty damning words from the Treasurer about how he sees the economy going next year, and there's some pretty grey clouds there. But I think that there's some pretty good silver lining in those grey clouds. Yes, unemployment might be up, as he's indicated, but we will pretty well see another period of low interest rates, possibly even lower interest rates, according to some commentators, if the economy does start to unwind a bit. And that's a good environment for the housing market. So that environment, although from a general economy point of view is not crash hot, it is a good environment for the value proposition of the credit advisor to be operative, and we think more and more people will start looking for the assistance of a credit advisor as they move into either new housing or come to the housing market the first time. Or the credit advisor market will be in excess of 46% where it is now. We think that number will go north. A couple of downsides and things our members will need to watch out for is that all indications are that the first home buyer sector of the market will be fairly flat, and if that continues, obviously there are more opportunities in the growing investor interest in the market, and also the interest of next time buyers coming back into the market.
You've been watching MFAA On Air.